Good morning. It is Thursday, 6th June 2024. Welcome to yet another episode of Pre-Market Commentary. Today I have titled it as with a question mark, Dead Cat Bounce. Yesterday I was thinking of whether we have reached the high, all-time high and the peak of the market as far as the bull market is concerned. So I had given three reasons as to why one may want to look at this as a intermediate top, if not a long-term top. An intermediate top will run for about 3 months. In my assessment, a long-term top can run for about 18 months. So now let's assess what happened yesterday. Yesterday, the market rallied very, very sharply up, and it was a shocker to a lot of people that the previous day it fell on extraordinary high volume of 2.7 lakh crores. Yesterday, it rallied up on 1.87 lakh crores, which is extremely high because the average is about 1.15 crores. Now, yesterday was also the maximum number of trades NSE has ever done. So, yesterday was a different kind of record, that is, in terms of number of trades. So, it meant that a lot of people, a small number of trades, the value per trade was small. So, therefore, you had a large number of trades. Yet, our total trading volume was lower than previous day. The assessment from this is a lot of small traders would have jumped in yesterday, bargain hunting. So what happened as far as the institutions were concerned? The FIs continued to sell. They sold about 5,600 crores plus. DIs continued to buy. They bought about 4,500 crores. Incidentally, both FIs and DIs had sold the previous day. I don't know why DIs panicked on the previous day, maybe because of redemptions. But yesterday they came back with a bang. So now we have a wonderful setup where the correction which has taken place is about 68% of the drop which we saw from the top. Now, where will this market go? While it's impossible to assess it exactly all the time, but let's look at some probability. Now, prior to this fall, there was a continuous secular decline for about a week, about a month. The market was going nowhere, except the technically, it got disturbed when the market went up on Monday, which was due to the fraud exit polls. That technical disturbance came up with greater havoc day before yesterday. So let us say there are exit polls were talking of 270, 250 for BJP. Then market would have come down maybe on Monday. On Tuesday, it wouldn't have gone down much because it was in line with the exit polls. But these fraudulent pollsters did a number on all of us where they showed numbers of 400 plus, and a lot of people joined the bandwagon and had to suffer huge losses on Tuesday. Now, SEBI will only ask people like us to say we are not SEBI registered advisors. But there are a lot of SEBI unregistered advisors who came on TV and said markets will hit new highs on 4th. You know who those people are. And SEBI, as usual, will never do anything against them. But they will insist that you have to call yourself a SEBI unregistered advisor. That is how the state of affairs in this country is. Nothing will change whether a regime changes or not. So now, if you're a technical trader, you should look at a Nifty resistance of 22,700 on a closing basis, and the support of 22,200 on a closing basis. Resistance at 22,700 and support at 22,200, both on a closing basis. Intraday, it may go up today because globally the markets are good. So I would not be led by what happens intraday. I would like to look at closing basis. On the Bank Nifty, the resistance would be at 49,400 on a closing basis and 48,000 on a closing basis as the support. So these will be significant numbers which you can look at before we take any further trades. So now, what is there in store for us? Today is the weekly settlement for a Nifty. So expect some injections by the Jane Street kind of people in the second half of the session. You also have RBI policy, which is coming in tomorrow. You have the swearing-in ceremony, which is coming on Saturday. So we have a busy 2-3 days ahead. So volatility will reign supreme. The VIX is down significantly, but not significant enough to talk about a stable thing, a stable market. VIX below 15 will be stable. Now we are hovering around 19. though we had gone up to 25, 27 in the recent past. So what happened globally? One single stock is ruling the US markets, that is Nvidia. Yesterday, Nvidia went up 5%. So Nasdaq made an all-time high. S&P made an all-time high, or rather, it came near an all-time high, I suppose. And Dow Jones oscillated very violently because Nvidia is not there in Dow Jones. It is there in both S&P and the Nasdaq. So that was as far as the S&P made an all-time high actually. They both have closed in the green significantly. So that has carried over to your Asian markets. Nikkei is up 350 points and Hang Seng is up close to 170 points. So we should open with a gap up. And now whether gap up will get sold, we will know by 1:30, 2 o'clock, when the expected injections should come. US 10-year yield is weakening, which is, as I said yesterday, is a sign of a recession. Now, gold and silver have bounced back of their important support levels. Silver, for instance, was below 30 for a long time. Now it's trading above 30. So it should probably be trading in this range for some time before the breakout happens, which should be the next target, should be about 36. So what did the ADRs do? ADRs mimicked what happened in India. So you had a HDFC up by 5%, which was the same thing here. ICICI, which was up by 3.5%. Reddy was up by 1%. Infosys and Wipro was up over 2%. So we will have to again watch it very carefully, because a dead cat bounce is also called a wave B in Elliott wave theory, which is basically what a suckers rally, where everybody comes in and buys because they think it's bargain, and then it holds on for a couple of days and then it resumes its secular downtrend. I believe as of now, based on the data, that we are in a downtrend. Unless we cross the all-time high, which we saw on Monday, we should take it as a downtrend, which is only about 700 points. It's not that, it is 2,000 points or something like. So even if you take a short position, if anybody takes a short position, I'm not recommending anything, but so that could be your major stop loss. So I would tread carefully. We will hunt for bargains as usual. We will do day trading both in long and short today. And that is what our philosophy has been. Whatever market, we will try to hunt for bargains as well as look to sell on strength. So whatever you do, hope it's a successful day. It's Vijay here signing off.